Good morning, everyone. Welcome to the European crossover webinar. And we did have some Italian data come through. It's not showing here in Reuters, but Italian consumer confidence. And they didn't post it on the Squawk, although they just said, I think it was the Italian consumer confidence. We did get German import prices and French producer prices earlier. And rolling into today, we will have building permits and personal income at 8:30 Eastern. Building permits are going to come in at 8 Eastern. And core PCE at 8:30 Eastern, along with durable goods. Oh, okay, we can have initial jobless claims early also. And monthly home prices at 10 a.m. Eastern, or 9 a.m. Eastern, along with final University of Michigan at 10 a.m. Eastern. Yes, Stelios just said Italian confidence numbers, big jump. So yeah, it was Italian confidence. And it is saying Italian manufacturing confidence, 95.9. We'll take a look at where we stand here with the euro dollar. We did see a pretty good little pullback yesterday after that strong rebound on Monday, and we're just kind of holding steady here. Take a look at the cable. Same here, relatively quiet in FX. Now we are seeing the indices holding their own here. Let's go to there. We saw a little bit of a dip, but we've kind of rebounded here. We'll see how we stand here, but we're still holding up very well. Right there. And take a look at the SPOO, same thing. A little bit of a bid in here as we come into the European session. And NASDAQ held that 12,645 again, and they're trying to push higher. We'll see how this plays out. Getting back to FX. We'll take a look at how the Aussie is. Everything's just quiet. I mean, a little bit of a bid here in the Aussie, despite, like I said, giving back a little portion of its gains. And the Kiwi seemed a little bit more vulnerable when I was doing the analysis in Asia. But look at this. It had given up 3/4 of the move. And look, it's trying same thing, a little bit bid here. Obviously, with the indices on the bid, that's the reason why. And we'll go on and take a look at the news. Australia New Zealand dollars seesaw on Brexit and U.S. stimulus news. Australia and New Zealand dollars seesawed on Wednesday as a report of a possible Brexit deal was offset by an unexpected roadblock to the long-awaited U.S. stimulus package. The Aussie has edged higher when an ITV reporter tweeted a Brexit deal could be struck on Wednesday. The cheer was muted when President Trump said he wanted Congress to amend the coronavirus aid bill. That left the Aussie a fraction firmer at 75.29. Some profit taken would be natural, given the currency is ahead a solid 8% for the year, but more importantly, up a massive 36% from the trough. It hit during the market madness of mid-March. Kiwi was flat at 70.34, down from the recent top of 71.70, and it's up 4.5% for the year so far, and almost 24% from the March low of 57.03. There was hopeful news on the coronavirus domestically, with South Wales reporting only cases as a lockdown in the northeast of Sydney looked to be limiting the outbreak. The lockdown is a blow to an economy which has been recovering strongly in recent months and is in revival in consumer spending, buoyed by the jobs market. Data out Tuesday showed retail sales surge past all expectations in November as online discounts boosted demand for electronics and household goods. And investors bet the weak dollar will keep rally going in 2021. Investors are counting on a weakening dollar to boost rallies in everything from U.S. stocks to emerging markets and industrial metals in 2021. Record U.S. lowest interest rates, massive financial stimulus, and a growing appetite for risk are among the catalysts that contributed to the dollar's 6% drop against a basket of the peers year to date. Over 2/3 of analysts in a recent Reuters poll said the dollar would keep falling until at least mid-2021 as investors continue shifting into comparatively riskier assets and seeking higher yields. The table is set for continued dollar weakness, said Michael Purves, Chief Executive Officer. Weaker greenback is a boon to the U.S. exporters as it makes the products competitive abroad and also makes it more profitable for U.S. multinationals to convert foreign earnings back into dollars. Bank of America Global Research estimates that every 10% drop in the US dollar translates to a roughly 3% boost in S&P earnings. At the same time, the S&P 500 has tended to use a rise an average of over 22% following years when the broad-weighted dollar index, which measures the dollar against those of the country's major trading partners, declined between 0 and 3%. With the measure down just over 1.3%, things are looking very, very good for equities investors in 2021. The negative impact of the currency fluctuations on North American companies hit a four-quarter high of $14.16 billion. Declines in the dollar also tend to buoy prices for the raw materials, which are priced in U.S. currency and become more affordable to foreign investors when the greenback declines. The dollar's decline is a double boost for commodities, not only because most commodities are priced in dollars, but also because periods of dollar weakness tend to coincide with greater growth, said Jerome Brockland. S&P's Global Sachs commodity index is up 74%. And in fixed income, the markets, the classic way to play the dollar's weakness is to increase exposure to inflation-sensitive assets, such as the Treasury's inflation-protected securities. Although inflation has consistently remained low, below the Fed's 2% target, trillions of dollars in government spending has recently revived discussions of its return. A weaker dollar is also a boon for emerging markets. Few expect the dollar's decline, however, to be a one-way. Signs that the Fed may tighten the monetary policy earlier than expected could also boost the greenback, analysts said. And there we go. Well, it's quiet overall in FX lands. We're just going to move into the analysis. So the euro gave up the majority of its gains from Monday. Support for Tuesday will be, I don't know why that states here, why that didn't update. That's crazy. Because it gave up the majority of those gains on Tuesday. Let's see. I guess maybe I meant to say Wednesday there. Hold on. Yeah, it gave up the majority of its gains from Monday, which was for Tuesday here. Let me see, 2036. Yeah, okay. So that's why, so I said it gave up the majority of its gains. And I meant to say for Wednesday, but support will be 20. Yeah, I did. That is correct. So I did meant to say Wednesday here. Support would be 2096 followed by 2036. I thought we might see some follow through, but we didn't. So let me open up the bias chart. So 2096. Thought we might even see a little bit more follow through or not. Obviously, with equity still stronger. And the upside was going to be 22.22. Onto the cable. So cable closed lower on Tuesday after the strong rally on Monday, closing below the 33.82. You can see that we got that lower move here. Resistance on Wednesday will be 34.55 with support at 32.71. And on to the Aussie. So the Aussie closed lower on Tuesday, closing lower than halfway from the halfway point of Monday's range. Resistance on Wednesday will be 75.75. Pretty close coming up. Actually, it looks like we may have come close to there anyway. 75.75 was supported 74.39. And let's go to the Kiwi. So the Kiwi saw a strong retracement closing below 34 of Monday's range. Support on Wednesday will be 70.98 with support at 69.63. Doggone it, I swear. So, I mean to say resistance is going to be 70.98. With support at 69.63. And you can see here we slipped back here. I thought we might be able to maybe dip a little bit lower. I thought we might see some follow through. But we're just not, like I said, obviously with indices still holding up pretty firm. We're not seeing that follow through. But let's go on and move on now to the Canadian dollar. So the dollar CAD posted another steady gain on Tuesday. Resistance on Wednesday will be 29.78 with support at 28.35. And on to the peso. So the dollar peso appears to be forming a short-term double bottom. You can see it right here. Support will be 19.95 with resistance at 20.31. And like I said, everything's pretty dead this morning. onto the dollar yen. So the dollar yen closed a bit higher on Tuesday. Resistance for Wednesday will be 403 with support at 325. And boy, everything's pretty quiet right now. And onto the dollar. So the dollar index saw a rally to 91 that eventually fizzled, closing near 90. Resistance will be 90.51 with support at 89.84. And let's just imagine what we already had. So let's go and move on to the cross rates. And you can see this we held here, and that's would have been our support right here, the 72.77. And resistance is going to be right here, this bar right there. You see the opening here, which will be 73.39 for today, which we had 73.40. We'll leave it there. And onto the euro pound. So pretty quiet session here. Look at this. After the volatile moves we've seen, we're just absolutely dead in the water. We're not going anywhere. Resistance is going to be right here at the 91.30. And support, well, I don't think we're going anywhere. We'll just leave it here for 90.56. No changes. On to the euro odd. Same thing, real quiet session right here, right there. You see the opening of this body? That's going to be support 60.64. And resistance is going to be these two bodies right there. The little dojis, that'll be 61.76. And onto the euro Kiwi. Support here, it looks like we can stay relatively quiet, but the support would be the 71.50. And resistance, I don't see it much higher than where we are right here at this wick. Actually, it looks like you need to look at it pushing lower at this point. So resistance will just be that high, which is going to be 73.02. I don't think we're going back there. And on to the Aussie yen. A little bit of a rebound here. Same thing because of risk on. Resistance is going to be these two bodies right there and with that opening. And that is 78.32. And support is going to be just yesterday's low, which is going to be right there at 77.83. And once again, still very, very quiet session. Look here in the guppy. Support's going to be these 2 wicks right here, which would be 38.26. With resistance right there at that level. We'll actually give it just a little bit higher at that closed doji, which is 39.06. And lastly, with the story nod. Same thing. Look how quiet we are. We're not even moving. We had 76.25. So obviously we saw a pretty good rebound. We actually finished with a kind of like a minor, small, medium-legged doji. Resistance is going to be this top wick here, which would be 77.78. And support will be this lower wick there, 76.91. Mira said to take a look at Palladium, and Ibrahim said to look at the dollar CAD resistance as a typo. Let's go to that. Oh, yep, you're right. Hang on. Thanks for pointing that out. Bear with me. Let me get to the dollar CAD. And I meant to say 29.78. Thank you very much. Resistance is 29.78. We supported 28.35. Thank you very much. Appreciate it. And Amir wanted to look at Palladium. Well, we are just sitting here. Look at that key level. It's just holding it like a rock, which is 23, right? 23.12. We're holding here. Really, resistance comes in right there at that body close, which is going to be 23.63. We're 23.37. And you can see support is 23.11. That one's clear as a bell. 23.11. Look how that's been holding it. That's been a good strong line there. So, and what you'd be looking for to see if you can get, and that's that resistance is going to be 23.63. And Amir said also platinum. Okay, let's take a look at platinum. We're still holding here. Look at this level and see how important these body closes are. You see how that's also provided a little bit of support here. And we also, this is where we closed on that level. See how important that is? So right there, the 1004 called 1005 essentially. And your initial resistance is going to be yesterday's high, which would be 1023, which are obviously at 1017. And but we're holding as long as we can hold. As long as we can defend this, which is essentially 1005. But we've been doing it. Look how they've been holding against this. Look, they close, they open. The low is here. We dip below, but we closed above. Hit 1005 exactly, almost at 1005. Again, 1005. You see, and even when we blew the stops, we came back and we closed above 1005. We came back yesterday. We tested the stops lower. And they actually opened them up at 10:05, or actually right here right there. Open up a little bit better. Close at the 10.05 essentially, and then to this morning we're holding the 10.05. That 10.05 is like a rock. You get below that, you're going to hit some stops. But your key level right there is going to be that right there, 10.23. We'll just take a quick look at gold, see what that's doing. Kind of in no man's land, if you look at it. We did get above 1847. And key resistance right now is at 1900. We're just stuck in no man's land right now. And you can see here how we finished on Monday, almost like a long-legged doji. So buyers don't have control, sellers don't have control. But what's the prevailing direction? Been up. So you generally pull back, which we did. And now we're just sitting in a very quiet session. So not a whole lot right now, and indices are holding up really well. Greg just shared his thoughts from their. He calls it the. They always do the riddle. So DAX remains in a likely correction to the potential first leg of a major reversal. Given that the U.S. is yet to blow out like the DAX did previously, that requires a significant underperformance from the DAX in the new year. Either way, the shorter term outlook beyond Christmas is the same. So other than that, that's it. It's just a very, very quiet session. We'll see how we play out. We can go and take a look at the individual equities. You can see how Apple on the 2-hour chart, this is going into yesterday's. Now we have opened up a little bit higher, kind of staying quiet. We had this medium-legged doji, then a hanging man, then a gravestone doji. In after hours, we dipped a little bit lower. We dipped even further. Now we've kind of popped up, but we're still sitting pretty quiet. Microsoft was barely moving around. It's kind of holding up in here. Amazon staying quiet. Google remains weak. Netflix, same thing, weaker overall. And Facebook continues to remain under some pressure. We'll take a quick look at Tesla. Well, we're staying relatively quiet, but this has been all over the place. And let's see. Oh, NVIDIA. That's what I was wondering, like, who am I missing? $531. Let's see what it is on pre-market. A little bit lower here. A little bit of pressure. Other than that, that's about it. Looks like it's going to be quiet for FX overall. Yeah, Rena said, and Tesla, which we did take a look at Tesla. And this is a little bit concerning here in Tesla. I had this on a 2-hour chart. You see here, we broke the trend line. We did dip. We saw some follow through. And we came up here with a little bit of a hanging man. And we're just sitting here. There's a potential for us to slide back. So we shall see. The markets are holding here, but we shall see how that plays out. And Amir says NVIDIA at the day looks like looks like it's looking to trigger. Let's take a look here. We're just stalled in this area. You see here, this is key would be to get above 551. We just can't. So we're just stuck. Essentially, we're just stuck trading between 520 and essentially 540. And this back. So we dropped down in here. We rallied. We saw two hardcore selling days. I mean, this was huge, from essentially 580 all the way down to 510. And then we dropped in here and we've been trading. Look how we're stuck in range here. We're not going anywhere. A little bit of up, a little bit down, a little bit of up. Then we stall. Then we dip down, come back up, and here. So there's no momentum right now at this point. But with that, we'll see you in the chat room on a very, very quiet day ahead of Christmas. And thanks for joining here on the European Crossover webinar.